Now here's the latest in the world of business. Kenya is intensifying efforts to secure access to China's apparel consumer market, seeking to tap the country's huge population, currently at 1.4 billion people. Trade and Industry Cabinet Secretary Kinyanjui says negotiations with Beijing are at an advanced stage, with the initiative set to grant Kenyan exporters a duty-free and quota-free access to China's market.
According to United Nations data, Kenya's exports to China totaled under $240 million in 2024, a fraction of the over $8 billion of imports it received from China. The imbalance has translated into a widening trade deficit, with imports from China, largely machinery, electronics, and industrial inputs, significantly outpacing exports. In order to bridge this gap, the government says it is crafting an export diversification strategy targeting Europe, Asia, and African markets under the African Continental Free Trade Area.
We are also looking at diversifying our export markets into Europe and other markets, and working through the EPZA. We will soon be coming up with a strategy on how to go to the Far East, to Europe, to parts of Asia, and also within Africa, noting that the Africa Free Trade Area is now in motion, and Kenya can be the official place where some of the best clothing come from.
With the agreement set to take effect from mid-March, Kinyanjui says the deal will open new opportunities for Kenyan manufacturers, particularly those operating under the Export Processing Zones framework, while strengthening the country's position in global value chains.
Have had extensive negotiations with China, and as it is right now, we have finished what we call the early harvest agreement, and we hope by mid-March we should be signing. And therefore Kenyans who are in the export market will be able to access the Chinese 1.4 billion market, quota-free and tariff-free.
He adds that ongoing policy reviews are aimed at enhancing competitiveness and attracting sustained foreign direct investment.
Changes within the law, both on tax and regulation, to ensure that our industries and our businesses are competitive. And this is all aimed at ensuring that we continue with a sustained inflow of FDI, and that our industries can also expand moving into the future.